G'day everyone, Aussie Dollar Man here with some Aussie Dollar insights for you. Tonight we're going to have a look at a review of last week's Aussie Dollar US Dollar market action, including confirmation of that February 3 low as we took out those tops and turned the monthly and the weekly swing charts up. We're also going to preview the week ahead and look at the key areas that I'm watching in time and price before finishing off with some tunnel through the air training and continuing our look at the ephemeris. So plenty to get through. Let's get stuck into it. Before I do that though, a very quick disclaimer. Nothing that I say in this video should be taken as a recommendation or trading advice. It's designed to be educational in nature only. Everything I look at is just my interpretation of the works of W.D. Gann, particularly Gann's book, The Tunnel Through the Air. So let's start with our Australian dollar review. As you can see here, I've got a daily chart on my left and a 4-hour chart on the right. We'll start on the 4-hour chart and we'll move up from there. The market opened with a little bit of a gap down, only a small one on Monday morning. That ended up being the low of the week. We were fairly sideways throughout the week before we had our CPI figures on Wednesday. The market tanked initially, rebounded strongly, mucked around a little bit. A pretty difficult area to be looking to enter a trade unless you're already long in the market. But then once it found its feet on Thursday, it rallied quite strongly and it took out obviously these highs here, which I'll show you why they were important later, and this crucial weekly top here as well. So not just a weekly top, but that was the January high as well. So in taking out that top, you can see here on the big picture, this is the daily chart again, as we had, but you've got the weekly chart and the monthly chart on the left here. On the weekly chart, we have had an up week. So this is all one weekly upswing. We've taken out those previous tops, as I said. And then on the monthly chart, we've taken out the January high. That confirms that this monthly downswing is over. If you don't have a lot of experience using the monthly chart on your market, go and have a look at the last 5, 10, 20 years on your market and have a look at the monthly swings. When the monthly swing chart turns, unless you're in a really sidewaysy period like this, where sometimes it only goes up 1 or 2 months and then down 1 or 2 months like this, generally speaking, the monthly chart will run for a while. So this is very important that we have turned that monthly swing chart up. Now, initially, I was thinking that we are heading down. I was expecting a pullback, and I'm still treating this as a pullback. But there's a couple of key levels that we're going to talk about coming up shortly that we need to watch with this, because yes, we've taken out all those old lows, but we've now regained this low, we've regained this low, and we're pretty close to regaining these lows too if we go much higher. And I think we are going higher at this point because this is the start of the monthly swing down here, but this is all one weekly swing so far, and moves generally don't just unfold in one swing. So for example, you can see the last monthly swing up from this low up here, that took a couple of weekly swings to unfold. So keep in mind, there's probably a little bit more upside here on the weekly chart, but eventually it will pull back and it's probably got a little bit more upside in it as well. So this monthly upswing is probably not going to be over anytime soon. When I spoke about my dates that I watch each month, I put out that forecast 3.5 months in advance. I did it on, I think it was the 18th of December last year. I nominated a few of those dates. One was the early February area for a strong date, which was this one here. So no surprise to see the monthly low coming in there. The next one's not till the middle of March. So we could run up another month or so, and that wouldn't bother me at all. Wouldn't surprise me at all either. And then we'll see what position the Australian dollar is on across all of those swing charts. You can't rank the strength of the market based on one swing chart alone or one bar chart alone. I know a lot of people like to use candlestick charts. I just like the simplicity of bar charts. I've always used them. I think sometimes candlestick charts give you too much noise, too much information, and they can trick you a little bit. I know probably a lot of people use them a lot better than I do, but at the end of the day, the information that is used to construct a candlestick chart is exactly the same information as a bar chart. So it's open, high, low, and close. I just like the simplicity of a bar chart. But looking at this, I think that there's more upside here. But at the end of the day, what these charts tell me, higher bottom on the daily chart. So we're into this nice weekly swing here, expanding weekly swing up here, taking out these tops, and now the monthly top being taken out. What this tells me is that we're heading up at the moment. Now, that doesn't mean we're going to shoot up for the week and we all jump in and buy long on Monday, because markets, they move in waves, or they move in sections or swings, however you want to phrase it. So at some point, it is going to have a little bit of a pullback, and we'll talk about that shortly. But the video that I did put out, it was 8 days ago now, so it was at about the 6th, 7th of February. That video there, the Australian dollar has bottomed. I'm a lot more confident in that bottom now that the monthly swing chart has turned up. I did believe it at the time. There was a moment on Wednesday night when the US CPI came in strong and the market dropped about 0.5 cent in less than an hour. And I thought, oh, maybe I went off a little bit early here. But no, the Australian dollar has bottomed for now. We may look back on that as a yearly low. Okay, that's this one here. It's a very crucial point you can see here on the monthly chart. I've put a ranges resistance card on there. This is taken from Gann's book, How to Make Profits in Commodities. And the Aussie fell, the low came in rather on the 75% retracement level. Now that's a key level. It can hold a market. People talk about 50% and the 62.5, etc. 75% can still be a very strong low. What I find though is if a market breaks that 75, if it can't hold it, it usually takes out that low down there, okay, and then goes further. So it may double bottom, but probably break and go further. So again, that becomes a really crucial point on the Aussie dollar. So at the moment, we're rallying up into what I still think is likely to be a lower top on the monthly chart, but we'll see what happens. That's not just going to happen. Next week is the 23rd of February. The week after that is early March. We're still probably not going to know by that early March stage because this is all unfolding. Markets unfold on the smaller picture timeframes, and then the 5-minute chart, the 15-minute, the hourly chart, they'll all unfold. They'll do their thing. They'll give us our 4-hourly swings, and they'll all unfold into the daily swings and the weekly swings, the monthly swings. It all takes time to unfold. It doesn't just happen, boom, we're going up, boom, we're going down, oh, we're going up again. It takes time to unfold. So that's why you've got to watch your market and stay on top of your form reading work there. But looking at this, as we rally, Gann spoke about the 50% level as being crucial. He said you can make a fortune just tracking and trading the 50% level alone. You'd want to do a bit more than that, I think, but it is valuable by itself. That, to me, is a key point to watch on the way up. If we can get above that 50% and keep going, then there's a very, very good chance that this is the yearly low. I don't think it is, but that's the testing point for it. It's got to break that level. Now, keep that number in mind, 67.56 US cents. We're going to look at another ranges resistance card, this time over this monthly swing here. So looking at that monthly swing there, notice as we go up, we paused and we hit it. That's the 25% retracement. We did it 1, 2, 3 times, ran down into that little higher bottom there again, and now we've burst up above there. But what this market has done, what this market action has done, is it's told us, it's the market, sort of giving you a nudge, nudge, wink, wink, saying this resistance card is important to watch. So it makes these levels, 37.50, 62.5, 75, all important to watch going further. And isn't it interesting? You look at the 75% level. If we do rally 75%, and last week I spoke about the British pound, which is in a very similar position to the Aussie dollar, probably looks a little bit more bearish, to be honest, but you look at the pound, there's a very, very strong, what we call a price cluster at that 75% retracement on the pound chart, which is very similar to this. So it wouldn't surprise me to see the Aussie get up here. If it gets up there, you're hitting 75%, and you're also hitting that big 50% point. So really, it's a key testing point anyway because it's 50%, but there's a fair bit of pressure there. So I'll be keeping an eye on that as these moves unfold in the coming weeks and months, and I'm sure we'll be talking more about that over the next couple of months as well. So that's a recap of where we're at on the Aussie dollar. Let's have a look at a forecast now for the week ahead. There's a fair bit of economic news coming out this week. I don't sit there and say, oh, it's going to turn here and here and here and go up into this news announcement, down into that one. News is hard to read because sometimes the news will come out exactly as everyone thinks, but it will have the opposite reaction in the market because it's already been priced in. Sometimes it hasn't been priced in properly and it will still move. Sometimes it will do the opposite. Sometimes it will do exactly what you expect. It's a little bit of a lottery there. Time and time again, I've seen, though, the charts are more reliable overall. If the charts say the trend is up, the market generally finds a way to interpret the news as positive and it continues up. It's just a funny thing about how markets work. And if you want to go into that a little bit more deeply, I recorded a video this week of W.D. Gann's Ticker Investment Digest article. You can have a look in there. Gann talks about this a little bit more, in particular, the law of vibration. But looking at the week ahead, Tuesday, 2:30, we've got our cash rate announcement. You can see I haven't put the headings on the top there, but if you go to forexfactory.com/calendar, the current cash rate is 4.35. The economists are forecasting a cut to 4.1%. Whether that happens or not remains to be seen, and how the market reacts to that remains to be seen as well. We'll talk about dates in a moment, but I just want to quickly show the economic announcements coming out. The day after the cash rate, you've got the wage price index coming out on 11:30 on the Wednesday. Now, these little folders here are the expected impact of these announcements. So there you go. President Trump speaking tentatively, hasn't locked in a date, hasn't locked in a time, but somewhere between 5 a.m. and 8 a.m. by the looks of it on Wednesday. That's Sydney time. When President Trump speaks, it's usually a high impact. So they've got it in red there. The markets like to move after Trump speaks, or maybe Trump likes to speak in a way that moves the markets, but they tend to move however you want to look at it. But clearly the wage price index is a strong one, a strong indicator there, something bigger likely to happen there. Also, the New Zealand cash rate will be announced at midday on Wednesday. Interestingly, their cash rate is very similar to ours. It's normally a little bit higher. It's currently a fraction lower, but economists are expecting a 0.5% drop in their cash rate. Now, New Zealand is not Australia. It shouldn't be news to anybody, but it's not. But often, people will draw comparisons between the two. And so if New Zealand are dropping rates heavily, people will look ahead and say, well, maybe Australia are going to have to catch up and things like that as well. You may see some movement around there, but at the end of the day, I'm looking at my swing charts. Half the time, I don't even remember that the announcements are coming out. Then finally, on Thursday, we've got our employment figures coming out as well. So how many jobs added, what the unemployment rate is. These are all things that could move the Aussie dollar. But the main thing for me, I believe that the cycles move the Australian dollar. And I don't just believe that. It's not just a blind belief that, oh, yeah, I believe in this, so it must be right. It's just based on years of experience with this stuff that you can look ahead at a cycle and it will give you an indication, and then you get to the day and there'll be some news often that comes out and people will look at it and they'll say, oh, the market went up because of XYZ news announcement, but really it was due to happen with the cycles anyway. But if you want to have a look, obviously with these dates, I posted 3 months worth of them back on the 18th of December. I did miss an inversion there. So the February, starting in February, the 3rd of February, I did have as a high initially, but we did pick up going into that low that it was going to be a low. So you do realize, oh, I've missed that inversion there. But there are the dates. You can see that they were published in advance, and you can get the dates for February and March there as well. In addition to that, I did point out some bigger picture dates as well, as like that early February was not just one of the monthly turning dates, but it was a bigger turning date as well. So you can check that out on the channel under FX Forecasts. The date for this week, and I say date because there is only one, it's the 16th of February, which is actually today, Sunday the 16th of February. Now, obviously, that's a Sunday the markets are closed. 16th of February, if you're an Aussie, you would probably recognize that that's the birth date of the SPY 200 index. That's the futures contract over our ASX 200 or our Australian share market index. And it started trading, the futures contract started trading 16th of February, 1983. And question though, 16th of February, it's a Sunday, has the pivot already come in? It was due to be a low. This is after the inversion of this. So we had the 3rd of February low up to the 10th of February high. Now the 10th February area is choppy and sideways. So there's a bit of a question mark on which actual date that was. We'll look at that in just a second. But after that, it's due to drop into the 16th. Now Friday's trading was the 14th of February. So given that we allow a couple of days either side for these dates, maybe that low is already in and we're running up from there. After that, the next date to watch is the 24th of February. So if you can get a long trade out of around the 16th of February, obviously it gives you a good week or so of swing trading to the upside using an hourly or a 4-hourly chart. But let's have a look at this. As I said, that's the 3rd of February low down there. And then up here, there's our Monday 10, 11, 12. So one of those dates, maybe Friday the 7th, could have been the date of our top. Maybe it's coming over the weekend, but it's shown on the chart on the Friday. But somewhere in here is our top. There is a way of knowing exactly which one of these is the top because the market will square out. There's a mathematical price point that each of those dates, as you're going from a low to a high to a low to a high, there's a mathematical price point that it will square out at, and you can work that out in advance. That's obviously higher level stuff, though. It's very painstaking to do, and it's not something that every GAN trader does. If you use your swing charts and you use your cycle work, you basically got most of your trades covered there. But coming down there, that's the 13th. That would be 3 days early. That's the 14th. And then the date is the 16th, which is Sunday. So technically Monday or Tuesday it could come in. So we could, we've had an expanding daily upswing here. I certainly wouldn't be looking to jump into the market here. But if we have a week sort of a pullback into Monday, even Tuesday, and if you can see what I call completion, so if you can see that move finish, if you've done some price forecasting work, or if you can see the swing charts, maybe it's doing weaker swing down a couple of times, so a smaller range then another smaller range, and it's saying, yeah, it's weak, and maybe it hits a range as resistance card over this level here. If you can see that, there may be a long trade there, but that's what I'll be looking for this week. Either the low is in there. I think there's probably going to be a little drop down Monday, maybe Tuesday as well, and then after that, it should run up to about the 24th of February. If we look at it with our resistance card over that daily move there, again, remember I said I pointed these out. We were hitting 25. Now we've gone through them. Anywhere that we pull back to, I'd be looking for it to find support now on the old resistance. So what does support mean? It just means a level where you'll see buying come in, and you'll see the market stop around that particular level there, and then head up there. So looking at the 4-hour chart, it wouldn't surprise me to see 2, maybe 3 little sections down to around that 63-cent mark. And if you can see that, maybe even a little trend line drawn through there, maybe it hits there Monday, as I said, maybe Tuesday. That could be a nice little long opportunity for that next run to the upside there. All right, so long story short, I think that we're heading up. I don't think that this week we're going to see a major high. I think we'll run up most of the week after that low comes in. And we'll see what happens from there. Long term on the Aussie, at least into the middle of next month, I see that as a potential target. Now, March may be that middle March date that I'm watching for. It may not be the final top. Maybe it's an intermediate top, and we have a pullback to the next date, which I haven't given out yet. And then, maybe it'll be the next date after that. But we'll track that as we go, and we'll see how generous I'm feeling if I keep giving out those big dates there. I did give out one of those big dates in another video on my channel, which you can have a look at. That's the Australian dollar crash video, the medium-term forecast, I think I called it at the time, for next year. You can have a look at that on the channel in the FX forecasts. All right, so that's the Aussie. What I've been doing there in form reading, again, if you want to get into that stuff, the 2 places I'd recommend and that I learned from, How to Make Profits in Commodities by WD Gann. You can grab that from wdgann.com. I learned form reading from Safety in the Markets Active Trader Program. That's that one there. And everything that I use from form reading is taught in my Safety in the Market stuff there that I learned as a student. And I did do some teaching there over the years as well. So I do find it, I don't get anything for recommending it to you. I just, in my opinion, it's good, solid stuff for form reading, and it's training that every trader should have. Let's get into the tunnel through the air training now. Last week in episode 3 of Aussie Dollar Insights, we generated an ephemeris using the astrology software called SolarFire Gold. You can go to esotech.com for SolarFire Gold. I don't get anything for recommending that to you. I've used it since 2009. It was $450 back then. I think it's about the same now. It's great. It hasn't broken down. The other thing I love about it, I'm not giving a big plug for it, but the other thing I love about it is it doesn't update with these fancy updates that change the look and then you can't find where everything is. It's pretty much the same program that it was back in 2009, and it's brilliant. It does absolutely everything I need it to do from an astrology point of view for my Gann trading and research. There is an alternative called Astrolog, which is free. I have no idea if it's good or bad. I haven't used it. I know a lot of traders do use it, so it's probably pretty good. But if you want to try that as well, you can. But I'll be using SolarFire Gold. And this week, we're going to take the ephemeris that we generated last week and apply the results to a market. Now, a very brief application. I'm not going to do all the work for you. I'm just going to show you how the work is done. So we did this ephemeris. If you remember from episode 3, we did a geocentric Jupiter ephemeris. So what does that mean? We started January 2000 and we ran for 30 years, and we just tracked the position of Jupiter in its orbit. So if you picture a circle, it's got a starting point somewhere. 0 degrees Aries is the astrological place that you'd say that cycle starts, or that orbit starts. And then this number will be from 0 to 360 as Jupiter goes around its orbit around the sun. Now, one orbit takes a little under 12 years to occur. So obviously Jupiter is one of the slower moving planets. You can see 1st of January, Jupiter was at 25.26, 25.3, 25.35. So it's moving a tiny bit per day in terms of degrees. When we come down here, we get to about 27, oh no, I'm in the wrong spot. That's okay. Sometimes you'll see these dates stop, or these numbers rather stop and start to go backwards. That only happens on a geocentric cycle. That's when the planet reaches a period in the orbit where standing on Earth, which we are, I'm assuming you all are, standing on the Earth, it appears, as we're viewing the planet, that it starts going backwards. It's just to do with the eccentricities of the orbits, and you can I'm sure you can Google that somewhere. But it will appear to go first stationary, so it stops, and then it will go backwards, which is called retrograde. Then it will go stationary again, and then continue forward through there. Okay, but what we can do with this information is we can start to work with our market. So we can look for key degree points. We start having a look at our tops and bottoms in the market, both major and minor, and we have a look, well, what was this planet doing at that time? Where was it? Was it retrograde? Was it stationary? Was it going direct, which is just going forward? Is there a certain degree point that keeps giving turns? So is there a point that Jupiter gets to that always signals turns or usually signals turns in the market? This is the work that you can do. Astrology books like Gann's recommended reading list and then the recommended reading for Gann researchers that I put out on top of that, astrology books will give you a million ways to, they'll say, oh, look for this, look for this, look for this. But until you get in there and test it on your market, you really don't know if that stuff works or not. So you've got to get in and do the work. You can also look at how far the planet moves between turns. You can also think longer term. Has the planet completed more than one orbit between its turns? So for example, maybe Jupiter does 1.5 or 1.75 or 2 or 3 or 4 laps between two major turning points in the market. Maybe you can find a link that way. But you're looking to see, market cycles. I'll talk about this in a later video, not today, but basically market cycles, there's two main kinds of them. One will use planets and one will just use calendar days or trading days, so day counts, for want of a better word. So two different kinds of cycle there. It's up to you to go into your market, find the repeating cycles and find out what's causing those repeats. And is it best measured in days or is it best measured in degrees of that particular planet? So as an example, and it's only an example, this was the 19 March 2020 low on the Australian dollar. This was after we had a little bit of a crash. It's funny, isn't it, when you talk about news, we heard about COVID back here and the markets around the world just went, sideways, maybe a little bit up, but they didn't really do much. And then all of a sudden, I think that was around the 9th or the 11th of March. Well, let's have a look. If that's the 19, 18, 17, 16, 15, 14, 13, 12, 11, 10, it's the 9th of March. And all of a sudden the markets just snapped and they said, oh, COVID, bang. And everyone just panicked and it ran down there. There are cycle reasons for that. And you can have a look when over time, you're going to revisit periods of the market over and over again. One is you layer different cycles on them. But two, you'll learn new techniques as well. And you'll want to revisit and have a look and refine things as well. But at that point, the cycle switched down and bang, the markets turned down as well. But from that top down to that bottom, at the beginning of that run, Jupiter was at 276 degrees in its orbit, and at the end it was at 292 degrees. We can have a look and say, well, if we map this over our whole market, are these common degree points? Does Jupiter at these points often give us a turn? Or we can track the degree movements between them. So we go to our ephemeris, and I put them on the chart, but you can see 31st of December 19 March 2020, you've got 276 to 292, and that is 16.11 degrees. All right, very close to the Fibonacci, the golden ratio 1.618. That wasn't my intention. It is actually something I'm looking into at the moment, so maybe that's just the universe or God giving me a nod. But anyway, you can see there, 16 degrees was the run down there. Now, is that important? Who knows? This is one reading. You've got to have a look at a bunch of highs and lows over years and years on your market. Now, I'll tell you this, I don't know if this is important because Jupiter, this is geocentric Jupiter, is not what I believe to be a dominant planet for the Australian dollar. So it's not a market that I look to for providing cycle highs and lows. The forecast that I gave out in December with all those dates coming in, that's not based off Jupiter geocentric or heliocentric, I can tell you that much. So you've got to go through the planets and you've got to go through helio and geocentric and you've got to do the work and it's going to take you time and you're going to feel like a lot of that time is wasted as well, but that's just how it goes if you want to sort this stuff out. So working with your market, I'll tell you, on any market that I use at least one geocentric cycle and at least one heliocentric cycle for all markets. So it's important to test both of them. I'll give you a little clue too. Cycles will usually involve 1, 2, or 3 planets. Okay, so there's a little bit of a clue there for you. Now, if you want to, well, arguably save time, in the long run, I think you save time, but you can find all of Gann's key dominant cycles for markets that you want to use in his book, The Tunnel Through the Air. And if you spend the time on this, I think it is going to be faster and certainly a lot more fun than digging through the market and going planet after planet and doing hours and hours and hours of marking up degrees and trying to find something in there. So on my channel, if you're new to the channel, I have got The Tunnel Through the Air. I recorded it all for you. And that's there. It goes for 687 minutes. And you can find that on the channel in the Tunnel Through the Air playlist. All right, that's all for this episode of Aussie Dollar Insights. I hope you enjoyed it. Wishing you all the best for the week ahead of trading. If you have any questions about this, feel free to drop them into the comments below. Or if you just want to say hello, you can do that as well in the comments as well. All right. Thanks for watching Aussie Dollar Insights. You can subscribe and turn notifications on if you'd like to keep up to date with the latest analysis and updates. I publish the Aussie Dollar Insights on Sundays at 7 p.m. Sydney time, but from time to time, I will put out bonus videos as well during the week. All right, thanks everyone. All the best with your trading. Have a lovely week and bye for now.